going to fund the U.S. national debt if the U.S. is pulling out and reverting to its own self? Who is going to do it? I'm going to give you three reasons. I'm going to give you three reasons why you should worry about it. The first reason that you need to worry about the U.S. pulling out and nobody funding that debt is the fact that the U.S. owes $37 trillion. That is a tremendous amount of money. There is no way that it can be resolved easily. Therefore, you need someone to refinance that debt every single year. Now, how does the U.S. repay its debt? Well, it doesn't repay it, really. It refinances it. It just takes on more money from investors that are willing to do it. Now, of course, if the U.S. pulls out of wars and pulls out of helping anyone, it wants everyone to just spend money in the U.S. and then they don't want to spend any money in the U.S. and they want to spend it somewhere else. Therefore, they don't need dollars. Then you've got a problem. So number one, the size of the national debt is $37 trillion, which is a lot of money. The second is that most of the buyers of that debt are non-U.S. So you need them to refinance that debt. Because if one day they decide that, you know what, I don't need that many dollars anymore because I'm doing business with someone else. So I'm not going to refinance your debt. So that means now that the U.S. needs to raise the interest rate in order to attract those buyers. And you know what that means? So now you're paying $37 trillion on, 4%. Now you're going to spend it on 4.5%, 5%, which is going to make things even worse for the U.S. So be careful. And the number three reason why you need to do it is because there are no easy solution. The U.S. on its own is not going to be able to solve that issue because most of that debt is from entitlements, Medicare, Social Security, and health and defense as well. So these are not easy things to deal with. You can't just tell people, well, you know what we're going to do? We're not going to spend as much money on Social Security. What does that mean? I mean, that means that when we say we're going to give you $3,000 a month, you're going to get $2,500. Be careful, because that is exactly what happened with Greece several years ago. Yes, they were in the same situation where their debt was ballooning so much that the European Union told them, okay, fine. We're going to refinance you, but now you're going to have to increase your taxes. You're going to have to take less money on a monthly basis for your retirees. And third, you are going to need to extend the date at which you are allowed to retire. What do you think in Italy? The retirement age is now 70 years old. So therefore, let's make sure that if we're going to pull out of the entire world, that we don't need them to finance the U.S. debt. Otherwise, stock market is going to be staying in correction territories for a lot longer.